You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 7th day of May, 2025, also known as Fed Day. Yep, true story. Jerome Powell will do his song and dance today. Well, the announcement will come out at 2 p.m. Eastern. No one's expecting a rate cut today. We're praying there's no rate hike. So there'll be some volatility in the markets right at 2 p.m. Eastern. Your best position is to be flat. But then the circus really begins at 2:30 p.m. Eastern. That's when Jerome will deliver his prepared statement. And then, this is where it really gets wild. He starts taking questions from the audience. And the markets just might go nuts, based on how he answers the questions and the questions that are asked. I'm sure the questions on their minds are the same as the questions on our minds and President Trump's mind. But anyway, thanks so much for joining us on this fine Fed Day. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. At the very top of the page, there's a purple button. You can't miss it. Click it, fill out the form. We'll get your indicators up and indicating. And you'll get 5 consecutive trading days. Don't worry about the weekend. 5 consecutive trading days where we treat you just like a passport holder. That's our highest level of membership. You have access to everything, the live training room and everything else, with one exception, and that's the members only workshop on Thursday night. Now, at the end of the 5 days, hopefully you'll be able to make a well-informed, intelligent decision as to whether or not trading is right for you. And of course, there is no credit card required. We don't want you fretting over money. We want you paying attention, asking questions, learning the strategy, and figuring out if it's something you can do. I think you can. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back at noon for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, this one's open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. This time, scroll down the page to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you have access to the question box, so you can ask questions and participate in the discussion. Now, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you do want to get caught up later. Well, you can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network, but you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. And thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have at your fingertips, and there's a whole lot of teaching moments over those 2,800 episodes. But again, you don't have to watch them all, or any of them. Just show up every day for class, tune in the afternoon, and you'll be there sooner than later. youtube.com/CFRN. As you can see, our daily schedule right here. Michael will be joining us in about an hour for a recap of what happened in the live training room this morning. And then we'll do a little live trading on the TradingView platform for about a half an hour. And then we'll wrap things up with our good word for the day. But first on the docket is our daily devotional. So let's get cracking. The topic that we're on, and will be for the next week or so, is after the cross. We did Easter, we did Holy Week, now after the cross. Today's scripture is John 16, verses 12 through 15. And I'm going to share it from the Message translation. Now, this is Jesus speaking. If you have that red letter edition, this is him. I still have many things to tell you, but you can't handle them now. But when the friend comes, the Spirit of the truth, he will take you by the hand and guide you into all the truth there is. He won't draw attention to himself, but will make sense out of what is about to happen, and indeed out of all that I have done and said. He will honor me. He will take from me and deliver it to you. Everything the Father has is also mine. That is why I've said, he takes from me and delivers to you. Again, that was John 16, verses 12 through 15. When Jesus sent the Holy Spirit, and every time we walk around with his Spirit in us, it is a declaration. I want to go through life with you. God in you has all kinds of implications. But let's just consider one aspect of how God in us affects our lives when we read Scripture. Since the Holy Spirit lives in you, something that happened after the cross, it means this. Every time you come to Scripture, you're not reading it alone. It is a tandem reading session. So ask God to speak directly to your heart. If something jumps off the page to you, that's not a coincidence. If it feels like, oh, that's exactly what I needed to hear, it's not an irony. The Spirit of truth is guiding you to the truth. He knows your heart. He knows the Word. He knows what you're facing. He knows what you need to hear. Scripture is living and active, as we read in Hebrews 4:12. And part of the reason why is because He is speaking to you through it, personally. So every time you come to Scripture, ask, what do you want to say to me today? Then read and pay attention. He will speak to you. Let's pray. Holy Spirit, thank you for guiding us in all truth. As Jesus promised, reveal to us what we need to know in your perfect timing. Help us to listen, trust, and glorify Christ in all that we do. Lead us in wisdom and shine the light of truth into our hearts. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Wednesday. Happy Fed Day, I guess. Let me give you the numbers from around the world. Start in the U.S. with the cash markets, or the indices as they're called. Currently the Dow up 265 points, but the NASDAQ is down 52. S&P 500 up 9, and the Russell 2000 up 8. It's really pretty quiet, pretty flat, pretty sideways for the most part, because everyone's holding their breath for the Grand Poobah, Jerome Powell, to speak. In the commodity basket, crude oil is down 73 cents, trading 58.36 last. That's a drop of basically 1.25%. Gold's down $29 after that huge last 2 days, trading 33.9270 last. That's a drop of almost 1%. Silver down 57 cents, trading 32.81 last. That's a drop of 1.75%. In the Asian markets at the close, the Nikkei fell 51 points, the Shanghai gained 26, the Hang Seng rose 29. Again, pretty small numbers. The whole world's waiting on the Fed. And in the European markets at the close, FTSE down 38, the DAX down 133, the CAC down 70, which is almost 1%. So we had a mixed day in Asia. It was a red day for the UK. And at the moment, it is a mixed Radio Wednesday here in the US of A. We got 3 of the major indices in the green. The Dow pretty solidly. The S&P and the Russell not so much. But the one in the red, the NASDAQ, down 57 points, and really 57 points is not a lot for the NQ, so we'll see who ends up playing follow the leader. I'm going to guess that by the time this session closes today at 5 p.m. Eastern, the markets are going to have been all over the place. They'll go up, they'll go down, they'll go up and down again, and maybe even again. I promise you, the best position this afternoon is no position. Okay? Wait for the markets to calm down. And remember, okay, the U.S. is going to react to the Fed this afternoon. Asia won't have a chance to react until tonight at the Asian Open. I think it's 8 p.m. Eastern. And then the European traders, they won't have a chance to react until the London markets open 3 a.m. Eastern. So what you see happen this afternoon will be happening overnight, but to a lesser degree. And then tomorrow morning when the Wall Street Open happens at 9:30 a.m. Eastern, we'll see how much destruction or not was done overnight. So, with that done, let's look at the news. Indian forces from the country India, not from the reservation, reportedly fired missiles across the border into Pakistan and the Pakistani-administered territory of Kashmir early this morning, local time, killing at least 8 people. Of course, Pakistan has vowed to retaliate. As Obama used to say, Pakistan. Okay. The attack marks a rise in tensions between the nuclear-armed neighbors who have a long-standing dispute over the mountainous region of Kashmir. I always thought it was just a place people went to smoke hash and sit cross-legged. India and Pakistan have fought 3 wars over Kashmir since the two nations were divided from former British India in 1947. India said it struck 9 sites in Punjab and Kashmir, targeting infrastructure used by militants linked to last month's deadly attack in the resort town of Pahalgam. 26 people died. Pakistan reported civilian casualties in at least 5 locations. India has accused Pakistan of supporting separatist violence, while Pakistan, of course, has denied association with the incident. On to the Vatican. The process to determine the successor to Pope Francis gets underway today as Catholic Church leaders gather in the Sistine Chapel to begin the secretive and centuries-old tradition known as a conclave. Ballots will be cast by a group of cardinals, the second highest rank in the church hierarchy. While there are 252 cardinals, only those under 80 years old are eligible to vote, with a 2/3 majority required for a candidate to be selected. Observers say the election will be a referendum on whether to continue the reforms set in motion by Pope Francis, regarded as a relatively liberal church leader, or will the Catholic Church return to its more conservative roots. Of the 133 voting cardinals, 108 were appointed by Pope Francis during his tenure. Way to stack the deck, Francis. Wow. While no clear frontrunner has emerged, some top candidates include Cardinals Pietro Parolin from Italy and Luis Antonio Tagle from the Philippines. Voting continues until a successor is chosen. with white smoke from the chapel's chimney, indicating that a decision has been made. Now, this is, well, not that that wasn't important, but this is important to you personally. And I guess if you're Catholic, that was important to you personally too. So, anyway, starting today, most travelers flying domestically within the U.S. must present a federally compliant driver's license or identification card known as a real ID and marked by a star in the upper right corner to airport security or to access other federal facilities. Travelers without a real ID compliant license or identification will still be allowed to board domestic flights, but should expect extra screening, according to Homeland Security Secretary Kristi Noem. Currently, 81% of U.S. travelers have real ID compliant identification. Congress enacted the Real ID program in 2005 in response to the 9/11 Commission's recommendations that the federal government set standards for issuing state identification documents like driver's license. Its goal is to enhance the security and reliability of state-issued identification, making it harder to forge and requiring states to verify applicants' information more thoroughly. You know, in the right hands, that could really clean up our election process, don't you think? But, I mean, it's totally racist to expect someone to have ID when they go to vote. I went to vote one time and they sent me home. Yeah. I had to get a piece of mail. I had to find my voter's ID card. I had my identification. They could have looked me up in the roll books. They could have seen that I was a registered voter. They could have looked at the picture on my driver's license and the picture on my, the face on my head that's in the picture. But no. And there's some reasons why I was treated in such a manner. That was back when President Obama was first elected. As I stood in line and looked around me, I said, I guess I know which way this thing's going to go. And it did. So, anyway, if you don't have your federally compliant Real ID, all you got to do is go to your local DMV, call them first or go online and see exactly, because when I went at my last birthday to get my driver's license renewed, they needed some document that I didn't have on me, so they couldn't give me the Real ID. It might have been they wanted my birth certificate, so I don't know. Check with your local Department of Motor Vehicles so you don't have to make 2 trips. Or if you're like me and you never go anywhere, it doesn't really matter. Wall Street, the April jobs report showed the U.S. labor market isn't rapidly cooling. But some on Wall Street still think an economic slowdown is likely underway, even if it's not showing up in mass layoffs or a large pickup in the unemployment rate. You can tell them it's a beautiful day. And what are they going to go say? No, well, yeah, right now, but it's probably going to rain and I better go back and get my umbrella. Could these people ever have a positive thought? Even though the evidence shows it's not true, some on Wall Street still think an economic slowdown is likely underway. I guess it's back to do you see the glass half full or half empty? I don't know. I use a paper cup. Unless there's some quick reversal on tariffs, the amount of disruption we're seeing there, along with every other force being imposed on the economy right now, will probably drag us under in terms of putting us into a recession. Thank you, JP Morgan Asset Management Chief Global Strategist David Kelly. You've brightened all of our days. On May 2nd, the latest labor report from the Bureau of Labor Statistics showed the U.S. economy added 177,000 jobs in April, well above the expectations for 138,000, while the unemployment rate held flat at 4.2%. Does that sound like the sky's falling to you? Yeah, not to me. Federal Reserve, which we've already mentioned too many times already, is widely expected to hold interest rates steady today at the conclusion of its policy meeting. But the path forward is anything but certain for Jerome Powell. Investors will be listening closely to the central bank chairman at a 2:30 a.m. Eastern press conference for any hints on future monetary policy actions after President Trump spent the last few weeks repeatedly calling for the Fed to lower rates while also lobbing insults at Powell. Yes, he could have left that part out. Nobody's perfect. Trump in recent weeks has referred to Powell as a major loser, Mr. Too Late, and a total stiff in a series of social media posts. He also said that Powell's termination can't come fast enough, before later clarifying that he had no intention of removing Powell before the end of his term in May of 2026. You know, what I haven't heard is who Trump is going to pick to replace him when his time expires, because he's not getting rehired. And if there happens to be anybody out there living under a rock that does not know this, the Federal Reserve is not a part of the federal government. It is a privately owned corporation. Google The Creature from Jekyll Island. Read it, and you'll never be the same. I promise. Disney has just revealed plans for a new theme park in the Middle East. Man, I can just imagine all those robes and turbans and all that stuff getting caught up in all the mechanical gear of all those rides and attractions. Man, this could be dangerous. The media and entertainment giant said today that the new theme park and resort would be located in Abu Dhabi, marking its first expansion into the Middle East and its 7th global resort. This announcement comes 15 years after Disney's last park project, Disneyland Shanghai, which was unveiled in 2010. The project supports Disney's broader strategy to invest $60 billion into its theme parks and cruise lines by 2033, including approximately $30 billion already earmarked for Abu Dhabi. How come they couldn't do that here in America? Oh, I see. Okay. It all makes sense now. To the news accounts. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, but also crude, gold, silver. We're currently in week 353. Over the last 353 weeks, we've issued over 19,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6 a.m. Eastern. She'll, of course, update it this afternoon or early evening as she does each day. But at the time she did the recap, 6 a.m. Eastern. Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 41 logic alerts. We're still waiting on the outcome of 17. So we've had 24 actionable alerts, of which 1 or 4% would have been stopped out, again based on market structure and the simple process we teach all of our passport holders. Now, every logic alert has an entry price, an initial target designed to help you get your goal for the day, and then typically there will be additional targets in most cases, and then a final trade to target. If it's a long alert, the final trade to target will be the weekly trading zone above. If it's a short alert, then the final trade to target will be the weekly trading zone below. But again, the initial target, that's designed to help you get your goal for the day. The logic alerts can come out anytime around the clock, 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, here's the deal. Yes, you can trade them, but make sure you use them for the reason they were created, to help you learn how to read a chart. When you look at a chart, do you see chaos, mayhem? Well, then you haven't learned to read the chart yet. But if you use the Logic 247 alerts and draw some horizontal lines, pretty soon you'll be reading charts like you've been doing it your whole life. Now, some of you may have never seen a Logic 247 alert. So let me just show you real quick. This will make me run over, but that's okay. Let's see what we got. Okay, let me scroll up to. Last week we ended up with 12% stopped out. We had 54 total alerts issued, 13 never triggered, 41 actionable, and 5 stopped out. So we had 12%. Remember, for the 353 weeks, we've averaged 20% or less. And this week we're sitting at, what was it, 5%? 4%? Something like that. So this is the Sunday night Globex Open. We go to work Sunday night at 6 p.m. Eastern. Every alert follows the same format. This is alert number 19,524. The idea here was to buy the ES at 57.36 with an initial target of 57.38, and the final trade to target was 57.41/42. But guess what? The ES didn't go up. It went down. You see, you can plan your work ahead of time, as I did yesterday, drawing those windows both above price and the windows of opportunity below price. Once you identify where the windows of opportunity are, then all you got to do is just wait for price to get there. It's kind of simple. Now, this one hasn't triggered. Good today, depending on how wild the markets get, I guess. The next one is number 19,525. This is shorting the ES at 56.82. Initial target, sell 56.82, initial target 56.80, and then potential support at 56.61, potential support at 56.36, and the weekly zone. Remember, the alerts that go out on Sunday night are based on last week's zones, because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So we had a short on the ES. That worked out real good. At the time Valerie did the recap, we dropped from 56.82 to 56.55 and a quarter. which would have been right in here. Then we had a short on the Dow, short on the Russell. This long on the Russells never triggered. Short on the NQ. Now this one, the idea was to sell 20,116. This initial target right here. Every initial target is designed to get your goal for the day. It's $100 per contract. With the exception of the NQ, this is $200 per contract traded. And we were looking to get down to 63, and we made it as far as 66. Now this happened Sunday night, so things may have changed since then, but this is where it was when she did the recap on Monday. Here we have a long, B means buy, okay, long that hasn't triggered on the NQ. We had a gap fill trade on crude oil. That was a long from 56.95 to 57.05. And then we had a short on crude. We had a long on gold. Short on gold that hasn't triggered. A long on silver. A short on silver that hasn't triggered. Now all that happened Sunday night. As we roll into Monday, now we are using the new weekly trading zones that came out Monday morning at 6:15 a.m. Eastern. We had a long on silver, a long on gold, no trigger here, no trigger here, long on gold, short on the ES, long on the ES, short on the Dow. This is a long on the Dow that hasn't triggered. Short on the Russell. Here's a long on the Russell that hasn't triggered. Short on the NQ. A long on the NQ. Both triggered. A long on crude oil. And our one stop out so far this week was a short on crude. Now we're rolling into Tuesday. Long on the ES, and a long on the Russell, long on crude oil, short on gold, short on silver, and there we go. That brings us all the way current through last night, right? Would that be right? Talk to me. Tuesday, May 6th, and today's the 7th. Yep, that's right. Okay, so now you know what the Logic 247 alerts look like. B means buy, S means sell, T is initial target, potential resistance, that's additional targets, or potential support additional targets, depending on if it's a long or short trade. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. And they're different. Masood, can I ask, where do you announce these alerts? They're posted in the Logic 247 channel. If you were on the trial, Masood, you got an email when you signed up for the trial. You got to install Telegram. I don't know if you've done that yet or not. And then there is a Logic 247 channel for members. And then there's a duplicate copy for trial members. Once you become a member, you get the golden key that opens all the private channels in Telegram. So it's very important, guys. If you're going to take the trial, make sure you install Telegram. It's free. It's fast. It's secure. And it's the heartbeat of our community. On any given day, there will be 10, 20, 30, 40 different posts made in the discussion group with charts, Tip of the hat to Stefan. He does a great job of posting his charts and showing you where great trade setups are. So we have different channels for everything. One for discussion. We have one for just shooting the breeze about non-market stuff. It's called Breeze. There's a workshop channel. We got all kinds of channels. So, but you can't get there till you install Telegram. Okay? Put it on your computer, put it on your phone, put it on your tablet. You'll always know what's happening with the community. Now, I said the concierge trade alerts are different, and they are. Number one, they don't come out around the clock. Last night, I got them out at 6:11 p.m. Eastern. Time got away from me. I've been trying to get them out at 5:55, 5 minutes ahead of the open. The time got away from me, and last night, these targets came out 11 minutes after the open. Doesn't really matter, I don't think, because we had such a flat session. Okay, at 6:11, 11 minutes after the open last night, all trial members had all these targets. S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. Okay? And if you're a member or trial member, make sure you read this information and understand it. If you don't, ask. And we'll fill you in. Yes, Masood, you're a passport holder, but do you have Telegram installed? Very well. Then you should email Valerie and ask her to send you the link giving you access to that channel. And are you sure about that status? Okay, well, if you've got Telegram installed, just go back to that original email Valerie sent you and click the links. When you become a passport holder, you get an email that has all the links to all the private channels. If you can't find the email support@cfrn.net. But I realize you have a problem getting emails, so I don't know. Maybe you and Valerie can figure it out. All you got to do is Google, or in whatever email client you use, just search for support@cfrn.net, and it'll bring up every email we've ever sent you. Okay? All right. Great question. Thanks very much. We shall now go where we go this time of day. And we're running a little bit behind, but that's okay. I'll pick up the pace. All right. Daily chart of the bellwether, the S&P 500 E-mini futures. We've been in a downtrend. Leg retracement, leg retracement, leg retracement. But this leg did not take out this low, so the trend has shifted. Okay, but has it officially become an uptrend yet? Well, here's the key. We've closed above the BBC, that's the green line. Okay, we've hit the 62% reverse fib. The step line, the black step line, has crossed blue and climbing. See, on the way up, it was on the left side. Now it's on the right side. When that step line crosses blue and climbing, we anticipate a retracement back to the BBC. Now, the pullback holds more often than not. As you can see, it held when it pulled up there, and it held when it pulled down there, and there, and there, and there. Then once price got below the BBC, now we're thinking short. So we get a leg and a retracement, the pullback held, a leg and a retracement, the pullback held, a leg and a retracement, the pullback held. The pullback holds more often than not, but eventually it's going to trade through. Just like right here. This candle, this day, started this entire downtrend. Okay? So what we're waiting on now is for price to come back and touch the daily BBC and that 50% fib. And one of two things is going to happen. The pullback's going to hold, or it's going to trade through. If it trades through, you're going to look for support here, and you're going to look for support here at the 38% reverse fib. If we overcome blue and climbing, when we overcome blue and climbing, we've got potential resistance here, 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 and up here. Okay. So I'm going to guess, with Jerome delivering his soliloquy today, we will see price come down. And then it may go back up. It may go up extremely high, or it may drop several levels. Make sure you pay attention to the daily chart of whatever you trade. Institutional traders, the deep pockets that move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. They can stay in a profitable trade far longer than you or I might be able to. Because let's say you're in a long position and that thing is cooking, but it's time for the session to end. If you don't have enough money in your account to handle the overnight margins, you got to cut bait. You got to exit that profitable trade you're in. Otherwise, you'll get a margin call. Also, institutional traders can weather a far greater drawdown that you or I would be comfortable with or be able to afford. So, whether you trade futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. So whatever it is you trade, spend 2 minutes with the daily chart. Number one, it gives you a look over the shoulder of the deep pockets who move price. Now, do you not think the institutional traders are aware that this is a 62% reverse fib? Well, they were aware of it this day, this day, this day, and even today. But price has dropped and we're actually below the step line. Once that step line crosses, anticipate price retracing back. Just like over here, coming down, step line was on the left side of red and falling, but once it crossed to the right side, what did we get? A pullback. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Bull bear cross. Okay. All right. All alerts are created on the 30-minute chart. Now here's yesterday where, during this broadcast yesterday, I said price was like sitting up in here somewhere, wherever it was. It was probably here. I drew a window above price, I drew a window below price, and I explained why. If you missed yesterday's broadcast, you can go and see these drawn live in real time. Okay? Because we knew this was a window of opportunity, we knew this was a window of opportunity. Okay? So price dropped to the bottom of the window, pretty much to the tick. Support. So we get a bounce. And I not only posted the chart in the discussion group, but I said it would not be unusual for price to do it again. And what did price do? It did it again. Now remember, this was the long window. And when the markets opened last night here, that long window filled beautifully. And the market topped out at the weekly zone 5682/80. 83. So this was the opening candle. We got our retracement to the BBC, step line cross, price retraced. We just consolidated for hours along the BBC, and then we caught a little drop, took us down to the weekly zone below at 56.35/36. We've tried to punch through it a couple times, but this seems to be where the market's comfortable. I mean, there's 1, 2, 3, 4. That's 2 hours, 4 30-minute candles that we've been in this area. Hang on one second. All right. Okay. So this is where we opened last night. We ran up and we filled that window that we drew on the broadcast yesterday at about this time. And then we came down to the zone and basically found support. Support will send the market up to resist. The first time we hit the zone support, it bounced us up to resistance at the BBC. Remember, the pullback holds more often than it doesn't, whether it's pulling up from below or pulling down from above. Okay, so we're back up to the BBC. That's potential resistance, and it most likely will send us back down to the zone, possibly below. Okay, but the closer we get to that Fed announcement, the quieter things tend to get. All right, on the Dow, I had drawn this window in yesterday, which filled, and then it filled in the other direction when the markets opened, but that was not the intent. That was a short trigger. So we get this wild open last night, and where do we find resistance? At the weekly trading zone. Now the vertical lines separates today, Wednesday, back here's Tuesday, back here's Monday. The horizontal lines, those are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern for over 15 years. Okay? When price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a weekly zone, we expect resistance until proven otherwise. So on the open last night, we got resistance at the zone. We pulled back to the BBC. We made another run at the zone right here, but didn't quite get there. And then we just continued. See, this is just sideways consolidation in anticipation of whatever it is the Fed's going to do. Fed day is typically a very quiet day until the Fed announcement and the press conference. Then it goes wild. But you can see we're finding resistance right now, as we did here, here, and here. Okay. Now, previously it was support for many hours, until it finally traded through, and then it found support at the next level, right? And resistance at that level. You get the idea. So these are the zones that were published Monday morning at 6:15 a.m. Eastern. And the only way to get the zones is to have Telegram installed and be a passport holder and have access to the weekly trading zone channel. When you're on the trial, you get them as well. We have a special channel just for you, just for that. On the Russell. Again, that rocket ship opened last night. Now, notice the high of this candle. If we look left, you see the bearish cross right there? That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. See that? Now resistance will send the market looking for support. Pullback holds more often than not. So we get a bounce, which basically gives us kind of a double top across here for the session. That resistance sends us back to support at the weekly trading zone. Only one of three things happens when price encounters a weekly zone. 70% of the time, consolidation. 20% of the time, rejection. 10% of the time, the slice. Okay? So the Russell is painting a green candle. Now we got a bearish cross right here, but that wasn't really an extended move. Okay, it was pretty short-lived. So you want something that moves, that's an extended move. That's when you expect that area. And that's what it is, an area, to be resistance. And it was. So now where's the next resistance for the market? Right there. See where blue turned to red? About 2008. Above that, 2010. Above that, 2012. And then you could run right up to the zone resistance. We're coming off support, so the market is actively looking for resistance. And remember, price is always trying to get to a weekly trading zone. If price is above the BBC, it's trying to get to the zone overhead. If it's below the BBC, it's trying to get to the zone below. Is that you, Michael?
It is me.
All right, guys, we'll pick up with the NQ when I come back. Michael's going to give us a recap of what happened in the live training room this morning and do some live trading on the TradingView platform. And then I'll be back.
All right, here we go with all of that. All right, so you should be
looks good.
Looking at my chart. Good. All right, here we go. Excuse me. Good afternoon, everyone. Today is Wednesday, the 7th day of May, 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. It's going to bring you to this registration page. Just fill this out. All right, once you fill out the registration page, down here at the bottom, make sure you have a TradingView login ID. Okay, click on this link right here. If you don't have one, click on that link and just follow the instructions. Once you give us that login ID, then we will have everything we need to get your indicators indicating for you on your charts. Okay. We had a pretty good day today. It was the best day of the month so far. So it was pretty good. We got our goal early on, which is also good. In the first trade, which is always good. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom today. I mean, 52 on the NQ, 76 on the Russell, 70 on gold, and 12 on the ES. That is all with one contract. That puts us at $1,490 with one contract this morning. Okay, today it took 4 minutes and one trade to get to $1,400. That was with 10 contracts. And we took a total of 18 trades this morning. Okay, so on the month now we're at $4,787. That's over 4 business days, averaging $1,196 per contract per 2-hour business day. On the year, we're now at $124,605. That's over 76 business days, averaging $1,639. Okay, $1,639. So, following the 24/20 blueprint, we have now worked 10 hours getting the goal for the day this year. So we are 4 full months in, 4 months in a week into the year, and we have worked 10 full hours. That's 76 days, 10 hours. How many hours is that per day? Let's do this. Oh, it's 7.6. 76 days divided by 10 hours. All right, well, let's do it this way. 10 hours is 600 minutes. So 600 divided by 76. 7.89 minutes a day getting the goal for the day. That's what it comes down to. And doing that, we're averaging $3,486 per hour. Okay, that's because we're doing it in 7.96 minutes. But anyway, that is if you quit trading when you get the goal for the day, and you add one contract per month. You would have only worked 10 hours and you'd be averaging $3,486 per hour. Okay, so let's get into the trades that we did take. Again, we didn't take a ton of trades today. We only took 18 trades. So I could start with the NQ or the Russell. We only had 2 trades each on them. Let's start out with the NQ. Now, I'm sure the NQ had a bunch of trades, but I took 2 aggressive trades here. Now, you will note that when I'm taking the aggressive trades, they are usually at a 50% or a 100% retracement. Okay, a 50% or a 100% retracement area. Okay, so when it goes like this, if there's an opportunity to jump in at the 50% retracement area right here, all right, that was a 50% retracement area, then I took it, right? And if we bring that over here, let's get rid of this. In this case, it went from here. It actually went, well, from here to here was the original spot, but this flipped over here. It flipped to YBR over right there. But it ended up going all the way to down here once it got really choppy at the end right there. But we took this trade right here aggressively. It was 50% of this leg right here that I had taken. After it had flipped that 50% marker right there was a good spot of this leg. Okay. And that is what I did with the ES today. The NQ, I'm sorry, the NQ. We only had those 2 trades on the NQ. Now, during the morning session, prior to that, there were still a bunch of trades in here, just none that I did. I wasn't really paying attention to the NQ. I was focused on the other things and the actual lesson plan as well. All right, that was the NQ. Now, the Russell was the other one we only had 2 trades on. We had 2 big trades. This trade took forever to happen, but we took this trade right here. And again, you're looking at the same thing, right? It gave a retracement. It was from here down to here, all right? Off the 50% retracement level right there. That is why we went short there. And this one, oops, I keep doing that. This one was right here, 50% retracement level right here. All right, now this one took forever to happen. If you look here, it seemed like I had that order on forever. It was on this bar here that I started that order. So it was like 10:28 I started that order. And I didn't get filled until 20 minutes later here at 10:46. I did have that order on for a really long time. And that was all that we did. This is the whole Russell today right here. So we took 2 trades and we're up 76 ticks. This one we picked up 55 ticks on that. I kept moving my target out on that. I had actually moved it out to the swing low right here, which was 60 ticks. And it got down to 35 and I moved, it was at 45 and it got down to 35 and I moved to 55 and then it got down to 45 and I moved it to 60 and it took me out with 55 ticks. And that was all that we did there. During the break, if we look at this right here, okay, if we look at this right here, then you would be looking from here. Now, right here, when it was going down, you were below the YBR, so you're thinking shorts, right? Then finally, it flipped the YBR up, so you're starting to think longs, okay? So when you start to think longs, you can go from here to here, is what you've been looking at, right? From here to here, the low between there. So the ideal entry point in that case, you want to get in right here at the middle part of it, right? Am I doing that right? I feel like I'm doing that backwards. I am doing that backwards. From here down to here. Oh, that's right. From here down to here. Yeah. No, I am doing it backwards. When it changes trend like that, I did a thing about this morning. When it changes trend like that, you then want to take advantage of retracements that are at the 50% or the 100% level. This is what I'm doing wrong. Okay, retracements that are at the 50%, the 100% level. And this one here, I'm sorry, is from here to here. There. So the 50% level was right here. This is where you want to take that trade from, right in here. All right, and it went up here, and then it did of this leg length. This, after doing this, going from here to the overbought and then back to the oversold, this would have been your leg length. All right, so your leg length would have turned into this right here. All right. So then, well, like this, I guess. So then you've been looking to enter. Enter at 100% retracement of this leg. So you could have been aggressive on the entry right here at 100% retracement of that leg. That's what you would have been looking for, or I would have been looking for. But I didn't do the Russell anymore. So that was it on the Russell. Now we'll go to the gold next. Okay, on the gold, we had majority of our trades were here on the gold. I know it doesn't look like it, but here they are. Our very first trade was an aggressive trade right here, and you can see the retracement on that. It's right here, aggressive trade at the open. The next trade that we took was, we just extend this up. Well, we'll move it over to here, okay, and then extend it up to here. The next one was a conservative trade right here at the midpoint. Okay, and the next one I actually kind of messed up. I was looking at the 50%. I mean, I was calling this 100% retracement to this, but it was actually 50% retracement to here. And I took the aggressive trade. Either way, it would have been an aggressive trade. I took the aggressive trade there. So on the first one, this is gold, right? On the first one, we got 14 ticks. That's where we got the gold for the day. Then the next one, we got 1 tick. Then the one after that, we got 25 ticks. And then the next one, the whole thing shifted. That shifted to over there. And this shifted to here. And we did a conservative trade off of this for another 10 ticks to get us to 50. And then we had a break even right there, conservative break even, I mean aggressive break even. Then here we had a conservative trade where we took a long trade for 19 ticks right here. And then the leg length on this would look like, this. Hold it. Let me remove this and I'll draw it for you. Okay, right there. And then the last trade that we took, we went from 50 to 69, then 69 to right here. We stopped out on this one, minus 15 ticks. So we went down to 54. And then on this one, we picked up 26 ticks to get us up to 70. And that was it. That was where we ended up trading on the gold. In all this right here, you can see there was a bunch of sideways action as we get closer and closer to FOMC. A couple of moments here where there was quick action, but most of it was sideways and choppy action. If you're going to trade this sideways and choppy action stuff, you might want to just get rid of the trend and trade it really aggressively like this. All right. If you start to get long leg lengths, then stop trading aggressive. But this is the most aggressive way to trade really choppy periods like this. You got to be really fast with your stop, with your risk management. You'd be buying the open of that bar. You'd be buying the open of this bar right here. You'd be selling the open of this bar right there. You'd be buying the open of this bar right here. All right, when the blue leads into the overbought or the oversold is when you'd be trading that. Now that's really aggressive trading, and I can get it done, but you gotta be really good with your DOM if you're gonna try to do that. All right, so the ES was the last one. Okay, and on the ES, well, you can see we didn't trade the ES right at the beginning for a little while. There was a big gap right here. We went for that gap fill. We got right over here. And finally, our first trade on the ES was right here. We got 12 ticks on that. Then we took an aggressive trade here for another 8 ticks to get us to 12. Then I got 3 ticks there. That was another aggressive trade to get us to 17. Then I stopped out, aggressive short right there. I stopped out, and that got me to 7. Then I had an aggressive short right there, followed that up. I got 4 ticks on that, and another aggressive long right here. I got 1 tick on that. That got me to 12. And I believe that's all we did with it. That is all we did with it. All right, so that was it. That's all I got. So looking at the spreadsheet, this is how we wound up. Let me just down a little bit. Looking at the spreadsheet, this is how I wound up. 52 ticks on the NQ, 76 ticks on the Russell, 70 ticks on gold, and 12 ticks on the ES. Put us up $1,490 with 1 contract this morning. Today took 4 minutes and 1 trade to get the $1,400 with 10 contracts on. And we took a total of 18 trades this morning. So total dollar value went from 140 with one contract when I had the goal to 1,490 with one contract when I finished off the session. Now, I don't know if Kyle's in here right now, but that talk that I had with Kyle during the break, nope, he's not in here. Okay, anyway, so we're at the month right now. We're at $4,787, averaging $11.96 per day. And on the year, we're at $124,605, averaging $1,639 per day. Okay. If you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Okay, click on the purple button, no credit card required. Once you do that, you will go to this registration page, just fill it out. All right, give us the information we request, and we will be able to get your indicators indicating for you so you can begin your trial today. All right, so now all that said, it took me 12, 15 minutes maybe to say all that stuff. We have FOMC today. So if we're going to be chopping around like this, then I want to trade really aggressively. All right, I want to trade aggressively like this. If we're going to be chopping like this. If we have leg lengths like this, then I want to go back to conservative like this. Okay, if we're in the middle, then I want to do conservative with the trend like that. Okay, so right now I'm looking for an up close on this bar, and I'll sell an up close on this bar. If we get an up close on this bar, I'll sell it. Okay, and that's the ES. So I'm just looking for that up close to trigger right here. I'll bring my DOM over. You can just watch it, and there it is. Bam, I sold it. Okay, it should go down to right here. Now, what I was talking about earlier is if you're going to trade like this, you have to be really fast with your risk management. You have to be on top of things. So my risk management says when I get 4 ticks in profit, I'm going to bump this stop to break even. Okay, so I got to be really on top of that, looking for that 4 ticks. Okay. And with this type of trading right here, you don't need the cycle. I'm going to stop out, I think. But with this type of trading right here, you don't need the context on there. It's going to hit me. It hasn't yet, but I think it's going to. We got up above the prior swing high, so I think it's going to keep going a couple more ticks. Yep, it did. Okay, and so that stopped me out. That first aggressive trade stopped me out. We'll look around for another opportunity here if we can get one. Be happy to take another opportunity. That one stopped me out. Okay. There was something I was looking for over here a minute ago. That's it. Interesting. All right, so we really don't have any trades set up here. I was wondering if we were going to get any trades today during this period. You know, we had that one aggressive trade that just stopped me out, and that's all we got right now. Leg lengths are starting to stretch out a little bit, so you don't want to do the aggressive trade right now. Well, okay, let's just look at this. Now, the aggressive trade right now, without using the slingshot, would be an aggressive trade with the trend. Okay, right here, you would buy the open of this bar. That'd be an aggressive trade with the trend on the ES right now. Just buying the open of this bar at the 50% retracement of that leg. Now, that has a little more to it than just the blind aggression that I had on that last one. This one is a 50% retracement of that leg. Okay, so it's got a little more meat to it than that last one. And it was worth taking. I took it. Here it is. So 4 ticks in profit, and that stop goes to break even. All right, we got to get 2 more ticks, 1 more tick, stop to break even. Now it should make it up to the prior swing high, which is up here at 55.75. I'm not going to be greedy on this stuff. 55.75 is perfect for me. I'll go to 55.50, even one less. Okay, I'm going to lock in. I'm just going to take the 4 ticks right here. That should go up here to 55.75. That it should actually go through it. Okay, but did you see what I did there, Masood? When I gave the down close right here and the opportunity to take the aggressive trade right there at the 50% retracement. That was one of the things we were talking about this morning. For those of you guys who are in here who don't know, you may or may not know, we've created a new channel out here called TIQ Videos, where occasionally in the morning sessions, we created this last week or the week before, I guess April 10th. April 10th. It is a horrible day. I'm sorry. It's not a horrible day. It's probably a good day for a lot of people. But for me, it was a day. It was somebody's birthday. But if you go out here to the TIQ videos, and right in here, you can see videos that I made. Like this is one that I made this morning, and that's walking you through exactly what I'm doing right here, what I just talked about right here. Okay. So like right here, this big move up right here, that should have a pullback to about right here. Okay, right about there. This right here, your pullback area is right here on the NQ. If you had a down close on this, you'd be at a 50% retracement of the leg length that you should be looking at. Okay, keep doing that. It's this one right there. Okay, you'd actually be below it. You take the conservative trade on an up close right here on the NQ. Yeah, I guess you should have already. Yeah, you'd be taking a conservative trade on the up close here, I guess, on the NQ. That is what we're waiting for here right now. All right. So we have about 11 minutes left here, guys. About 11 minutes left. Masood, you should have actually just gotten another email, I think. At 12:37, you took the conservative short on the NQ and lost. Was that a legitimate trade at 12:37? 12:37. In here. Conservative trade would have been coming out of the overbought. How do you lose on that trade? Oh, 12:37. Sorry, I'm looking in the wrong place. On this one right here. Okay, let's look at that. Let's look at that. You see it did change YBR, but that was after the fact. Look at the retracement that you had right here. That was 100% retracement right here. Okay. You should have been doing the aggressive trade right there. If you sold the open of that bar instead of selling the close of that bar, you would have had, 40, 50 ticks in that trade. You see what I mean? Oops. Yeah, it was right in here. You would actually been selling the open of this bar, where it went into the overbought. You've been selling the open of that bar. You see, but it had the 100% retracement right here. If your entry point is going to be at the 100%, if you have an opportunity to have an entry point at 100% or at a 50% with an aggressive, then do the aggressive. Okay, because you get a whole extra bar in it if you do the aggressive. It should bounce there. And if it goes into the overbought where it should bounce, or if it goes into the oversold where it should bounce, anytime, like if down here is your oscillator, right? And up here, when it does a 50% retracement like that, this is your 50% line, this is your 100% line. If when it hits this 50% line, this also goes into the oversold like that, do the aggressive trade right there, right? The same thing if this goes down to 100% retracement at the same time that it goes into the oversold, to the aggressive trade right there. Okay. That's what I was trying to get across to everybody this morning. Makes sense? So this was our leg length here, and it kept going down right through there. So you had right here at the 100%, it went into the oversold. Actually, it didn't right there. Sorry. My bad. Now, when it comes out of the oversold, right here though, but when it comes out of the oversold, you're going to be right at 100%. If you get an up close on this bar, that would be a good trade, because you're going to have an entry right here, conservative entry even, right here at 100% retracement of that last leg length. So on the NQ, that would be a good trade to take. So this is the NQ, and 12 points above the bottom of the bar is 80, so we're going to be at 92.50. 92.50. I think that's right. Actually, the low of the bar is at 79.50, so it'd be 91.50. Oops, well, it just filled me anyway. Okay, so we're in it. Now, it should be a good trade from right here, right? An entry at the 100% retracement. When this gets to 50, I'm going to bump my stop to break even. Okay, but why couldn't I do the math on that? Where was the actual entry on that? 91.50. It was at 91.50 that I should have had it at 92.50. Okay, but at a minimum, this should get up to the midpoint right here. At a minimum, it should get up here to 775, and that would easily be enough to get my stop to break even and lock in some profit. 775, my target's only up at 1150. So at a minimum, that would be good. Now this is gonna get up to 50 right here. There it goes. Stop to break even though my entry was off by a point. Okay, so I'll bump it up here to 96.50. That's 16 ticks. And now I'm gonna bump it up 16.50 up to 90.50. That's 32 ticks. 36. 38. 40. And we got all 75. Bang. How easy was that one? You had an opportunity to take a conservative entry right there at the 100% retracement. That was exactly what I was talking about. Okay. And that kind of what happened over here earlier, what you were talking about over here, if you'd have taken the aggressive trade there at the 100% retracement. I'm sorry, it should be from here to here. The aggressive trade here, at the time, yeah, this was right. I just click off it. That's a little high. So at the time where it went into the overbought was at the top of this bar, the top of that bar. If you took the aggressive trade right there, let's put 2 trades back on for a second, go over here, and we'll turn this on and go to data window. If you took the aggressive trade on that bar that went into the overbought, it's the bar after. So on the sell side, it went down 36 ticks. 36 ticks you would have had on that one. Okay, you took that last one with me, great. I told you how I was setting it up. My DOMs take up a lot of space, on the other screen. And the other screen is actually a TV. It's like a 40 something inch TV, but I got a lot of stuff going on over there. The DOMs take up a lot of space. So that's why I don't try to have them on the screen all the time. Okay, and these 4 DOMs. There's other DOMs too. I have to sneeze. Hang on. Oops. No. All right. Let's put this back over here to the side. So I'm glad you took that trade with me and you know exactly how it should work. That's exactly what it should do. Now, we've got a 50% retracement of this leg down right here, right? If it fails here, that shows a lot of weakness. If it drops through this level right here, you know, you want to be really cautious taking long trades if it drops down below this right here. Because you actually, if it drops below there, you've actually started a downtrend. And the YBR is not as sensitive as, say, the TV trades is. But if it goes down below here right now, then you've actually started a downtrend. You have lower highs and lower lows. Okay. It varies from person to person. Some people, they start from, from the trial. They never look back. But it varies from person to person. A lot. But what I got to say is don't rush it. Okay, don't rush it. Take your time. Let it happen. This is not the quick way to riches. This is the slow way. The slow, conservative, steady, slow and steady horse. It's one that wins at the end. Okay. But I told you what I was doing on that, and I actually put it on with the first number that I gave you on that NQ trade. The first number that I gave you at 92.50 is where I put the order on, or wherever it was, whichever one it was I just did that on. And then I realized I had screwed it up. I was going to fix it, and it failed me anyway. So I was off by a point. We still got 75 ticks. All right. It is 1:28, guys. I am going to be wrapping this up here in just a minute and a half. So, how do you change the target? Well, when you put it on, if you put the order on, when you're in the trade, if you put the order on, you just grab it and move it. Once you're in the trade, you can move it around however you want. I did that. Oh, you mean in the other thing? Well, you click on targets, and in that panel, that side panel, click on targets, and then it's in there, the limit offset. Click on the word targets, then click on target, and then make sure you go back to main and click on M for the menu and save it. Okay. Make sure you do all that stuff. All right, Michael. It's all in that video that I put out there before. It might be out in this channel. This one. Switching. I didn't give that a name. You're drawing fibs in the fast market. This is a basic Sierra Dom stuff. Watch this one right here. I'll be right in that video. Sorry, it just brought it up here on this other screen. So let me just see what I say in here. Click on that right there, and then you're gonna have the word target in here. Click on the word target, and then down here you'll just change it. Okay, I don't know in this video if I actually go over that in this video. There it is right there. There it is right there. Click on targets, go to targets, click on target, and change it right here. Okay, that's how you do it. Go to targets, click on target, and change it right here. And make sure once you do that, that you go back here. Let's go back another one. You go back here, click on the M, and save it. Okay, that's how you do it. But watch this video. You all have access to this video. It's right here. That was a pretty good idea, Dwayne. Creating that channel, so when I create videos, I can just stick them out there.
Yeah. Were you
Oh,
able
it
to
is time.
successfully get an email through to Masood?
About that thing, I he said I don't
About
know.
anything,
I
because
I don't
I
know.
was
Okay, yeah,
going
he says he
through.
got it.
I
Yeah,
was
he says he
going
got it.
through the Logic 247 alerts, and he's like, "Well, where do I get these?" And I said, "In the Telegram channel." And I guess, he said he was a passport holder, so I don't know if he
Yeah,
found.
I
I,
don't think he's a passport.
that's what
I think
I didn't think so either. But
I think he's mentoring. I don't think he's
yeah,
passport. I don't know. I'll go back and look. Right, there was some thing that came as a bank draft. I think it's how you
you
paid
were
off
a
Masood.
mentoring partner, I believe, like Michael said, Masood.
But I'll go back and look.
You just joined 3 days ago,
Okay.
and what did you
You
join as?
you got back into the room. The $97, I think, is what it is. That's not passport.
That's not passport.
Um, but I'll look at it again. I'll go back Masood and look at it again for you, just to make sure. Okay.
All right, I just wanted to get it cleared
Anyway,
up for him.
yes. Well, here we are. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that. It's going to bring you to this registration page. Just fill this out. Once you fill this out, you'll be sent a link to get into the next session, prior to the next session, every single business day until you cancel. What am I talking about? Once fill this out, and down here at the bottom, I said the wrong thing right there. Scratch that. All right. Fill this out. Down at the bottom, give us your TradingView login ID. You give us your TradingView login ID, hit register. All right. Once you hit register, then we know what your ID is and we can enable your indicators for you. And you get 5 consecutive business days. All right. 5 consecutive business days. And you get the email. You will get one email telling you how that all works. Okay. All right. That is it with that. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. You see how this is right here? Get into the middle. Be an aggressive trade there. It could be.
Okay, recap of the morning session.
Today, it took 4 minutes and 1 trade to get to $1,400 with 10 contracts on.
Good job.
Thank you. Thank you very much.
Okay, guys, we shall pick up where we left off. Michael, I'll show you real quick where we are on the daily, right here. We haven't quite pulled back to the BBC and the 50 yet. So, but we ran up and tagged the 62. We've done that the last 3 out of 4 days. No, you could almost call it 5. But anyway, under normal market conditions, we would see price retrace to the BBC, and we know the pullback holds more often than not. But once it does pull back, then it becomes a question. And this afternoon will probably, or has the potential to be, extremely volatile. So we'll have to wait for things to calm down tomorrow, and we'll revisit this whole thing. Okay, just want to show you where we're at on the day. All right, NQ. This was the open last night, and it ran into resistance. Now, this was a long window that I drew yesterday on the broadcast. You can go to youtube.com/CFRN. I already showed you a bunch of them. But when the markets opened last night, it beautifully filled the window. Windows never expire until they get triggered. So we find resistance at the zone. That's what we expect until proven otherwise. And then more resistance. Then we consolidated. It was really quiet overnight. And then this morning we broke down and found support at the zone. Support set us up to resistance at the BBC. And that resistance sent us looking for support, which we found right where we opened last night. Okay, see that? Okay. So that support bounced us back up to resistance times 2. The zone and the BBC. Okay, we expect both of those to be resistance until proven otherwise. And we're painting a red candle. Now the step line, based on the current market structure, that's potential support. Red and falling is directly below price. That's potential support. And then these 4 candles right here, that's potential support. That's potential support. I would let price get down to 19,762 and trade it down to 19,752. That's 10 points. At $20 a point, it's $200 per contract traded. Okay. All right. Crude oil. Here's where we opened last night. We overshot. Okay, this is the slice that I tell you happens about 10% of the time. And this is a good example. Once the move ran out of steam, price retraced to the zone it sliced through and then continued in the direction of the slice. We missed it by, what's that high? 74. We missed it by 6 ticks on that move. Okay. So we come back to support at the zone. Again, these are the zones published Monday morning, 6:15 a.m. Eastern. We expect that to be support, and it was. And that sent us up to the target and through the target. And, okay, this is today, Wednesday, Tuesday, Monday, Friday, Thursday. Last Wednesday, we put in these highs. And we popped above them and then quickly reversed. So again, people always say, how far left do I have to look? Well, in this case, today Wednesday, Tuesday, Monday, Friday, Thursday, Wednesday of last week. That's how far you had to look. Now, you don't know for a fact that's going to be resistance, but you have to have the understanding that it's an area for potential resistance. I mean, there was 1, 2 very strong attempts to break through that area. And here we only took it out by just a little bit. And we're always suspicious of a little bit. And look what's happened since. From resistance, we came down to support at the zone, bounced up to the BBC resistance. That sent us down to the short target, which gave us a bounce almost to the BBC. Then we came back to the target, the zone, consolidated, and we're now sideways consolidating just below that weekly zone. That was now these lows right here. Okay. Look left. See, you only have to look as far as yesterday to see where that support came from. If price continues down, you should expect potential support here. Potential support right here. Potential support right here. And then bang, you're at the zone. Trade every market exactly the same. Okay, gold. We're above the highest weekly zone. Gold has had 2 killer back-to-back days. Now, let's see. Wednesday, Tuesday, Monday. Yeah. All week. Look at that. Look at that leg retrace. Leg retrace. Leg retrace. Leg retrace. Leg retrace. Leg retrace. And then last night when we opened, all the other markets, the indices, they rocketed up. The gold was dancing to the beat of a different drummer. From the open, we came all the way down to the short target. Okay. And we kept going to right here, which is this low. See that? That sent us back up to resistance at the BBC, which sent us down to support at the weekly zone, 3366/67. The low of this candle right here is exactly 3367. And again, these are the zones that were published for our members and trial members this past Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, as I tell you just about every day, when you trade through a short target, and the same is true of a long target in the opposite direction, as you trade through and the market finds support, on the retracement, the underside of that short target becomes potential resistance. And again, and again, and again, and again, and again. And now we're just kind of consolidating sideways. Now, based on the last 15 plus years of history, by close of business tomorrow, no, Friday, tomorrow's Thursday, by close of business Friday, we expect price to be at or below the highest weekly zone. Have there ever been weeks that didn't happen? Over 15 plus years in all the different markets, yeah. There's been more than a handful, maybe 2 handfuls, okay? But think about it, 15 years, and how many different markets? 1, 2, 3, 4, 5, 6, 7 markets. So you got 7 markets times 52 weeks times 15 years. So yeah, we've had some misses. But by and large, that's how it's played out. So we'll be watching this Friday to see if it happens. If it does or doesn't, it doesn't really matter, because you're just going to trade what's in front of you based on what you learn in the live training room and the structure of the market. That's your guiding light. And last, silver. Here's where we opened last night on silver. Quickly got below the BBC. We had a little retracement, ran into red and falling, which is bearish resistance, and that sent us down to the target. And we actually traded through the target. You see this low right here from yesterday? That's what I mean by market structure. Support sent us up to resistance at the zone and the BBC. And then it sent us down here. We got below the short target. Found some support here. Right above this area right here that I would have pegged for potential support. And we finally came through that. And now we are just above the zone at 3268/3269. You could trade 3271 to 3269. It only takes 2 pennies with silver to get you gold for the day. Okay, we got about 16 minutes until the Fed announcement. But remember, the Fed announcement is just part 1. The real action happens at 2:30 p.m. Eastern, when Jerome delivers his prepared statement and takes questions from the audience. And the best position you can be in when that happens is flat. Sometimes the best trade is no trade. And when there's a Fed announcement, it couldn't be more true. To become a member, go to mytradingiq.com, watch the videos, read the content, and when you're ready to join, send an email to support@cfrn.net. In the email, just let us know you want to become a member. We'll send you an email that explains what it means to become a passport holder, and there'll even be a link that you can click to seal the deal. Number 1, you're going to get 2 hours of live training every trading day. Now, this is interactive training. In other words, you're not just watching somebody trade. You're seeing that, yes, in real time in live markets, but you're also hearing an explanation of every trade taken and whatever the results are. If it's a stop out, it's a stop out. We don't hide that from you, okay? I know you've been in rooms with the grumpy gurus, and Well, how'd that work out? We're not grumpy, okay? We're just trying to make sure you understand how to do what you've said you want to do, become a trader. So 2 hours of interactive training every trading day. Now, as you're watching and listening and learning, you're asking questions and trading along in your demo account so that you can qualify to go live and trade real money. Along with the group training, you get private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. And you're able to attend the members-only workshop every Thursday night, 8 p.m. Eastern. That's tomorrow night. So if you've been on the trial, okay, make sure you send that email so that we can get you official so that you'll get your invitation to join us for the workshop tomorrow night, 8 p.m. Eastern. And if that weren't enough, you'll get the golden key that unlocks all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. It's really a good deal. I checked. Okay, let's wrap it up with our good word for the day. How long will you live? We've all thought that at some point, right? Psalm 90 verse 10 says, "The days of our lives are 70 years." So, have you ever wondered how long you'll live? The Bible says the days of our lives are 70 years, and if by reason of strength they are 80 years. Yet their boast is only labor and sorrow, for it is soon cut off, and we fly away. That's all of Psalm 90:10. Why do some of us live longer than others? Paul answers in 1 Corinthians 13:9, "For we know in part, and we prophesy in part." But here are 3 things you can be sure of. Number 1, you can lengthen your life by obeying God and shorten it by disobeying Him. Fighting illness, facing death, Hezekiah prayed in 2 Kings 20 verse 3. "Remember, Lord, how I have walked before you faithfully and with wholehearted devotion, and have done what is good in your eyes." God answered in 2 Kings 20 verse 5. "I have heard your prayer and seen your tears. I will heal you. I will add 15 years to your life." So does God still heal today? Yes. His word says, "Are any of you sick? You should call for the elders of the church to come and pray over you, anointing you with oil in the name of the Lord, and the Lord will make you well." James 5:14. Number 2, when their work on earth is done, the redeemed go to heaven. Paul describes heaven in 2 words: far better. Philippians 1:23. And the architect, builder, and designer of your heavenly home is Jesus, the one who said in John 14:2, "I go to prepare a place for you." at home with Jesus, try to imagine what that will be like. And number 3, if you're worried about death, claim God's promise. With long life, I will satisfy him and show him my salvation. Psalm 91:16. And that's our good word for today about what can sometimes be a very dark topic. But that's where we're all headed at some point. Unless Jesus returns first. And if that happens, I want to make sure he catches me about my Father's business. Think about it. If the sky split right now and Jesus returned, what would he catch you doing? I'm not throwing shade here, okay? I'm certainly no angel, and I've lived no perfect life, far from it. But remember, the scripture tells us he'll come like a thief in the night, when you least expect it. All right, that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.